Hello, friends. Today we are taking a brief look at Hertz Global Holding, ticker symbol HTX. We'll be looking at the performance of the stock. We'll look at the latest earnings report. We'll then jump and look at some of the um, fundamentals and trying to find a fair value. To be honest with you, this is something, the reason why we're talking about it is because one of you guys asked me to review this company. So I'll give you my opinion, but thank you for joining me at Money Talks with Martin Reyes, where we learn to care for our money and find great companies at great prices. Hertz. So in the last day, it went up almost 5%. The last 5 days, it has gone up 1%. In the last month, it has come down almost 10%. Year to date is down almost 25%. Last year, down 60%. The last 5 years, which really is not 5 years because I think it started, it went public on July 1st, 2021. But since the inception, it's down 64%. So this is a hot mess. So I think that some people are looking at them just because a lot of analysts are giving it a hold, and they're looking at a target price of $9.60, which will be a nice 22% upside from this point. The next earnings that they're going to be reporting will be on April 25th of this year. They're trading by PE standards, really cheap PE at 5.6 times earnings, but looking forward, they're actually trading almost 21 times future expected earnings, which that tells you part of the problem with Hertz is that it's the earnings. And that's why we don't only make decisions based, or at least my recommendation to you will be not to make, or my recommendation for myself, to make decisions based just in ratios. You got to look at the whole company on itself. It has no dividends. They don't pay dividends. They shouldn't be paying any dividends. Hertz, some of the things, I didn't spend too much time, honestly, looking at this company, and you'll see why. But some of the things that I know about Hertz is that they bought a lot of EV Teslas and different EV cars, and now they're selling them all, and they're actually taking losses on that because it just costs too much to maintain them. So that was a bad move for Hertz. So last earning report, which was on February 6th, they missed. First of all, earnings are negative. They were negative $1.36, and in GAAP it was negative $1.14. So right there for me, I'm out. Well, now this is a quarter, so wait, Martin, don't freak out. But look at what they're expecting next earnings are going to be also negative. It will be a little better at negative 43 and negative 54, but this company is really struggling. Now, this is not necessarily a reason why to get out, but honestly, there's other companies out there that probably will be a better, at least for me, for what I'm looking for, a better opportunity. Revenue, they surprised with a beat of almost $29 million. When it comes looking forward, as you can see, earnings per share has been going down. I believe the revenue is expected to remain stable on the next 2 years, but earnings per share are for next year are expected to be 47 cents, down from the estimated. For this year, the estimated was $1.05, and the actual so far I believe this is so far. Don't quote me on that. Or maybe it's last year. It was 53. So 53 cents. That's almost 50%. I think that's part of the big reason why this stock is down so much. But let's look at the fundamentals. So before that, I just ask you to subscribe. I try to my best to. I read all the comments, so please comment down there. I don't respond right away, but I always respond. And even though it might take me a little too long, if you suggest a company just like Hertz, I will get to it. I have other companies that I'm wanting to talk to you guys about, but yeah, just suggest anything there, and I will be answered. So sorry, I'm trying to talk to you like if you were in front of me, and I'm having a hard time because I don't know what to tell you. I mean, this is a little bit of a waste of time, my brother. The person that wrote it, I think is a brother of mine, not a brother literally, but an investment brother. I'm like, brother, I wouldn't invest on I don't see any future in this company. Look at these revenues. Revenues in the last 5 years down 20%. Gross margins 20%. Gross margins on 20% on a rental company. Like this should be way higher. There is no reason why to have such a low gross margins. When it comes to earnings, negative, 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 and then a little bit of positive in the last 2 years, which is good, but come on. Profit margins are negative. That's the average. So losing money. Free cash flow, only 1 year of positive free cash flow. Everything is negative, negative, negative. Should I continue? Book value per share. This is, okay, so I can teach something today. Okay. So whenever you are trying to analyze a company that doesn't have so much historical information, right? Here you're looking at revenue. Can you predict that revenue is going to be somewhere between 21 and 28? Probably. Earnings is all over. I wouldn't really consider here. Free cash flow, once again, it's negative. So how can we kind of think about a value for this company? Well, the best closest thing that we could value it maybe is using book value. So that just means like if we were to have to sell the company, how much, and we owe the whole company, how much we will receive per share. The book value per share right now is at $9.88, and that's why I think the price target is close to the book value. There's a couple companies like Emo that I have value based on Olaplex, that I value based on the book value. I just look at the book value, and based on that, I make my determinations. They don't pay any dividend. Debt. Do I even need to say that they're over leverage? They are in high risk of going under. Shares growing like crazy. What are we doing? What are we doing? This is just a disaster, my friends. But I know that you want still to do me the valuation, so I'm gonna do the valuations. Let me first give you my disclaimer. I am not a financial advisor. I'm just a YouTuber. I may be completely, and I'm probably completely wrong about this company. So this is just for educational purposes and for entertainment. I hope that you are getting at least that as a value, since this company has no value from my perspective. So please do not invest based on my recommendations or not lack of recommendations. So if we look at the historical multiple valuations, hey, I would you're looking at somewhere between 13, eliminate this. Somewhere between 13.65 to $7.65. Looking at the revenue, revenue has been going down. But there have been issuing. That's how it's honestly. That's how they're staying afloat. They're just issuing more shares, and they're diluting you. So based on all these numbers that you look over here, the fair price will be $1.24. Looking at the earnings, if we were to have an actual positive earning, we're looking at $3.65. There's negative free cash flow, so I guess you could use the average from that big free cash flow that they got, and then say that is $2.65. I'm sorry. I'm very negative about this stock. I don't know if you can sense that. This kind of cash flow, there's no cash flow, so you can't use this. Earnings, valuation is all negative. So they're spending too much money. They're not making any money. They have tons of capital expenditure. I can't even talk. I'm just surprised. Yeah, everything is negative. That's the fair value. Fair value is no value. So, I'm sorry for laughing. I should be a little more professional, but I'm not a professional advisor. I'm just a YouTuber. I hope that you have fun with this video. I am going to stop here. If you want to get your YouTube, my valuation sheet, you can get it at Buy Me a Coffee. I will highly suggest that you subscribe, you leave a like or a dislike. If you didn't like my attitude today, I'm sorry. Please leave things in comments in the comment section. Let me know what you thought about my comments. If I'm getting something wrong, please let me know. Let's help our brother, the one that suggested this. Maybe you have some other point of view that may help him. If you have other company that you would like me to analyze, just let me know down in below, and I'll see you in the next video.